Good morning, ladies and gentlemen. My name is Claude Baumann. I'm the founder and CEO of Switzerland's leading financial platform, finews, and I'm pleased to moderate this webinar today on a highly sensitive topic, green bonds. The catastrophe of COVID-19 has given the world a wake-up call and a sobering vision of the economic and social devastation that climate change might bring. Therefore, responsible investors must be mindful of this vision of the future and accelerate their efforts in delivering progressive actions. As many surveys indicate, climate change, like COVID, will come at a cost, but the world cannot afford it unless something is changing. If not, this type of sustained downturn will plunge the global economy into a financial crisis of Greece-type proportion, but for the next 30 years. So action is required, and one vehicle helping the world transition to a more sustainable future is green bonds. While green bonds remain a fraction of the overall global bond market, the sector is poised for issuance growth against the backdrop of COVID-19. This is today's topic, and I'm very pleased to welcome my two guests. First, Dr. David Bresch, Professor for Weather and Climate Risks at the Federal Institute of Technology, the ETH Zurich, since 2016. He also earned his PhD in physics from the same university. From 2000 to 2016, he had several functions at the Swiss Re, including head of business development, global head sustainability, head atmospheric perils group, and chief modeler for national catastrophe risk assessment. From 1998 to 1999, he was a research associate at the MIT in Cambridge in the US. In the past, he also was a member of various delegations and working groups at the United Nations focusing on climate topics. Finally, he's an advisor to the Rockefeller Foundation and working groups at the, an advisor at the Rockefeller Foundation, a board member of the WWF Switzerland and of the Foundation Academia Engelberg. I'm also pleased to welcome Sascha Bernasconi, who joined the SEEDS Group in 2015 as a senior portfolio manager for SEEDS Asset Management. In this role, he became the first portfolio manager of a Swiss green bond fund. Prior to this, Sascha Bernasconi held a number of portfolio management positions and treasury functions for Pictet Asset Management, UBS, and Eurofima. He holds a Master of Science in Economics from the HEC Lausanne or University of Lausanne, where he was also awarded with the Prix La Suisse for the best diploma thesis. So welcome, gentlemen, and I would like to go ahead with my first question. Sustainability has grown to a main topic during the pandemic, but what exactly is the relation between climate change and COVID and the new way of thinking of sustainability? So the floor is yours now. And I think there is a relationship between these two.
Why don't I go ahead? I think green bonds, for instance, or the relationship between sustainable investments and COVID has become like apparent now, because many words that we have not known like almost 1 year ago are now in common language. So in German, even one of the most popular words has been elected to 2020, I think was Maskenpflicht. So the obligation to wear a mask at some certain stages. And I think it's been a change, a mindset change. And whereas sustainable investment, maybe in the early days, like in the 80s, 90s, have rather been a niche field, it has become very popular nowadays for various reasons. Maybe we touch base on them later on. And I think the actual pandemic has proven the world that, look, change is possible. So even if you do not want to change, even if a disaster comes and hits you very hard, you can quickly change. So that's why we all sit at home. We have to protect our environment, our colleague employees, and so on. And we sit at home, and it's possible. But it's only possible when something dramatic happens. Now, I think this may open the eyes for future developments to say, okay, we don't need a catastrophe. Maybe we can change it by ourselves. So I think this will help for sustainable investments in the long run.
Mm. How has the pandemic changed your scientific work and your daily business, Professor Bresch?
Yeah, exactly. To add on to that, I think that the good news number one is that climate did not move away from the agenda or down on the priority list, and that's a big achievement in a sense that we do, as mankind, may I say, understand that you cannot focus on only one thing because it's a highly interconnected world. And you can solve one problem only if you also look at the connections to the others. And in that sense, the COVID crisis has an element of an opportunity because we experiment with things we didn't think they are possible at that scale, at that speed. And that's probably something which can help us dealing with other challenges. We could not have imagined that we would shut down parts of things so quickly. This is not to the benefit of many. That's not something to be repeated, but it tells us more our ability to change. And if we change for the better, this might be the road to take. And I think also there, science looks very much into these processes and how you can use that in a positive sense to bring change about. And some of it will stay. So I think some of this, like the meeting we're currently having today, elements of that will stay. Some will bounce back because we are human animals. We like to meet, for example. We should not stick to what we currently have as a new normal. That's not a new normal. That's not the target state we want to be in. And in between, there are many things that develop and open up, and I think this is the opportunity. So the social science approach to it is definitely not only observe, but also distill what are the elements that bring about change. I think on the natural science side of things, there's, to be honest, not so much that's really new. Also, pandemics, in the sense of their dynamics, they're understood. It's just, as with any predictions, very hard to really predict and make point predictions, but to basically say something about the dynamics in more general terms is pretty straightforward in pandemics. You know, if the reproduction rate is higher than 1, well, you get a mess, and you bring it down, you start to control it. So that these things are well understood, and that's the same with climate. They also know if we keep the temperature at bay, Paris target well below 2 degrees, we have a very high chance to operate in a space we are used to, familiar to, and most of us will thrive. And if we exceed that critical threshold, then we get into a runaway climate change, basically, where methane will release from soils, and the polar ice cap will melt too fast, and you get all these very, very deep changes in a system where you will not even be so sure whether the OECD countries will be on the winning side anymore. And so I see these similarities, and in both topics there are tremendous opportunities for those who, I wouldn't say they need to study these things again, they need to take on board what we already know about these systems to act more consciously, and probably, I might say, with a bit of longer time horizon than the next quarterly reporting. That's the piece we have to get better at.
Are you surprised of the dimensions that the crisis has so far from a scientific point of view?
I think, again, the honest answer is yes and no. We did at time at Swiss, we looked into pandemics because we started to provide pandemic covers and things like that. And we felt we have a good understanding of the dynamics of a pandemic. But the indirect impacts, the cascading failure of the systems, to be honest, we didn't really dive deep into. So we did understand that it will bring some economies in very difficult positions. But I have to say, I studied pandemics before the financial crisis. So I was still in a model group up to 2008. And we did some of the learnings out of the financial crisis, like currently the role of banks, especially governments, in providing financial means, has not been seen before the financial crisis at that level, and neither again as we currently observe in the pandemics. And this element, I think we did not fully embrace in our considerations. So there's tremendous novelty. We explore while we go.
Coming back to sustainability and sustainable investments and green bonds, sustainability or sustainable investments have always come with the perception of less returns. And you're laughing at my remarks. So what is so funny about this, Sascha Bernasconi?
So I think it's a natural reaction when you go to a potential investor, when you speak to a potential investor or an existing investor, and say, well, look, we could do sustain. The moment you say that word, sustainable, there is an immediate, I don't know, reflection or whatever, and says, well, I don't want this nitty-gritty investment which doesn't give me any return. And I think if you type it in Google and ask for scientific studies, within less than 10 million or 0.1 second, you will have like 2 million results, either showing that it does a slight reduction in risk, or it improves, some claim it improves a little bit on the return side, and so on. And I think it's an endless story, unless you look at bonds. Look at bonds, it's very simple. You don't find many studies. And those who did it, there's a big insurance company who's running a model portfolio with normal bonds and a similar one with green bonds. And I think the most they can find out is that you have an annual, an improvement of return of a couple of basis points. So if I tell you, you can buy an Apple 2023 or an Apple 2023 in green, and all the proceeds that Apple is taking on this 1 billion green bond go into green investments. But Apple is the same credit risk, and it's got the same coupon, the same maturity. There's no reasons. There's basically no reason for there being a difference in yield or return. The only thing we now see, and some call it greenium, but I think it's temporary, there's a little bit more demand on these green bonds than on the other ones. So that increases a little bit the price or decreases a little bit the return to the maximum. And I think the maximum was, I saw personally, Daimler issued a green bond where you could compare it to a similar bond and they could get funding like 20 basis points cheaper. But I think that's just explained by so-called technicals. There's more demand for those green bonds. But otherwise, I like your question because I'm smiling. And immediately the moment you ask sustainable, would you think about it? Investors say, well, I don't like these things.
And one remark, I mean, again, to my point about the time scale, it has been an endless debate, as Mr. Bernasconi said, about marginal and so on. But then the question is also what do you want to achieve? And I think it's fair to ask more than just short-term monetary returns, especially from the financial system. Now, a single actor can, well, that's his or her value set, and that's absolutely fine if somebody has another opinion. But if you then think about the state of the world, and you're probably part of it, and you might live for more than the next year, you have a vested interest in this going well. And so it comes this element, some is labeled impact investment, but some is just absolutely proper, serious risk management that you might say, why should I go in an asset class, not in an asset class, but in a specific sector which didn't get the message yet? And why do I not play with those in the sector who got it? And I often think those who are a bit ahead on the sustainability sides might very likely they're better in governance because they normally have better risk detection systems. And that's not necessarily shown in an annual performance every time. But when things go sour, they do perform better. And so it's also a bit of an insurance element in it that you might be able to reduce long-term volatility, and you see some of that. it's not trivial to measure because many of these things are changing, emerging. And so then how you measure volatility is to some extent preempting a bit the result you get. Because if you take the whole universe, then it's not specific enough, and if you go too small, then it's not mature enough. So you have to find this balance, and it comes therefore at an element of, you might even say, moral and ethics, to say, where do I want to be, where I want to be investing. And that the other challenge we know is, as long as there are externalities with no price to it, namely, for example, carbon, it's unfair to ask for the market to price it in. It cannot happen. Somebody has to set this price, and the market doesn't automatically. But funny enough, it starts to do so very much. I mean, if you look at divestment engagement things and these things, they start to happen. And I see a broad push for this brighter part of the development, say developing in a direction of a sustainable financial marketplace.
Diving deeper into green bonds, I mean, at the end of the day, it's a question of measurement, or how do you select what the green bond is or what it isn't? Sascha Bernasconi, for example.
I agree. It's a very simple thing, green bonds. And one of the main measurements that comes out from many green bonds is that it's aligned with Paris 2015 Paris Agreement. And there it stipulates that the world should go down to zero. So wherever you are, with your CO2 emissions, and if you reduce it, like many companies do, by 20% in the next 10 years, or by 40% in the next 15 years, you have a clear measurement, you have a clear target. And measurement I think Professor Bresch can explain it in a better way, but the way I like it and why it's so simple, it's a proper measurement. Whereas if you have a rating, for instance, it's not a proper measurement in the scientific sense, because if something's got an A rating, is it 3 times better than a C? Well, and what does it mean if it's a little bit higher up in the E, but lower in the S, but better in the G? How do I compare these things? And I might compare it in my own way with my own lens, but you might do it in another way. Say, no, G is very important to me, so don't bother about the S. So coming back to your question, I think it's super nice because you can measure, well, are you at 2050 target? Are you at zero CO2 emission and still producing energy? Well, you are investing in an asset, or you're a company that is already or has already achieved the Paris goal, and still you produce electricity or you do other things. Whereas other green bonds that just go like, okay, we reduce our CO2 emissions by 1%, or we even don't specify what we do. They are, I would say, less, to a less degree, achieving the Paris 2050 goal.
Mm-hmm. Yeah. So you mentioned the ESG standards that are really a buzzword right now in the asset management industry. So you don't care about it?
No, I think it's a different way of looking at things. If you look at your assets and want to have something measurable, then you look at CO2. Now, if you look at the company, let's give an illustration. So we have an energy company, and it's one of those that you can look at is, for instance, Public Service Colorado. So they issued green bonds. But before issuing green bonds, when you look standalone at that company, you would see, well, they are rated C, where C is on a scale of A, B, C, D, rather low. They have a nuclear power plant. So it's something that flags up. They are burning coal just because sometimes they don't have enough energy and they need to fill that gap with coal. So on all the E aspects, or on all the sustainable aspects, they are bad. And probably in an ESG portfolio, whether it's debt or equity, you would say it's no way, it doesn't enter, because it's only on the downside. Now, when you look at green bonds, and they issued 4 green bonds, they they took like 1,600 million, and they've done all kind of very good, very ambitious investments into green projects like wind farms. And they also put in their strategy that they will reduce over the next 10 years, I think by 30%, and until 2040, by 100% their CO2 emissions. So this is a company which made it public, and they can't turn back. I mean, all the investments that are for the next like 30 years go down that transformation route or road. Mm-hmm. So you cannot turn around. But if you only take the ESG lens or goggles, you will say, well, this is a company, go away with it. But if you want to support, that it goes back to David Bresch's comment on it depends what you want to achieve. If you want to achieve a transformation and have like solid, stable return with a company which is maybe ready for the future, so maybe less risk and let's say even good governance, I think it's an absolutely different result.
Mm-hmm. Yeah. Would you like to add something, Professor?
Yeah, I think that the intention of and it was just mentioned, we need to be carbon net zero 2050, in fact, on a global scale. Now, those with more means at their hands should be faster. So Switzerland saying 2050 net zero is ambitious, but it's not overly ambitious. We probably should even be faster because we have all these means at our hands, but let's stick 2050 net zero. And then how you get there. One way would be to say, we need new companies who do things differently. And then you would invest in those, and that's the venture capital route, but it will take long to scale, and the incumbents will probably then not be seen as part of the solution. But as we just hear, many of these companies have been there for many years, but they embark on a transition. And part of their business still standard, but might say old-fashioned, old paradigms, and would they want to finance their new part of the business out of their old mechanisms? It's very hard to bring about transparency. And so the invention of the green bond to say, we allow people to go specifically into what they can label and provide evidence for as being part of the transition, that was the idea to construct this type of financing element. And the challenge is still, and we know there's the EU taxonomy and all these issues around, as a really good investor, and that's, well, probably I come very much from a value investing perspective, you have to understand what you invest in, even with green bonds. You cannot blindly go for it. And because it could be the mother company is doing that more as window dressing, that risk exists, right? Or greenwashing, whatever you call it. But on the other hand, there are some which can only transition if they find these new pockets of money because they have a long list of, say, for example, obligations to their clients they can only fulfill if they transition in a smooth fashion. And so I see that as an element, a successful investment means you have to be well informed. There's no way around that. And the green bond is only just an area where you know it's worth looking into because it's by design likely to be more aligned with where we want to be than some of the other investments. But some might be blunt, standard investments, not labeled anything, but very much aligned with Paris. And this is also something you have to consider.
Yep. Can I add one thing to the green bonds? I think the paradigm shift was basically in 2014, when all the market participants said, the investors, the issuers, the issuing banks or the lead banks said, okay, we only label something called a green bond when it fulfills the green bond principles. And there, one of the principles is that you have to have full transparency in the sense that all the assets that you raise, if you raise a 200 million bond, it needs to go to 200 million in a green project. And the other important principle is somebody needs to review it, somebody independent. So only a certified verifier can review it and say, well, this is actually really a green project. So if these two conditions are met, I think there is an immense transparency. So you really see what your money is doing. And you also get, as another principle, you also get an annual report, which states now the 200 million has been invested, or only 190 million has been invested. And you see, so if they announce, well, we will save 1 million tons of CO2 in a year, in a given year, and there has been less wind, so you will see a report that says, well, we only saved, I don't know, 850,000 tons of CO2, and they will explain the factors. But that transparency, I would say, is unparalleled. I've not seen other instruments that are so powerful. Now, the risk is there are other bonds, like, and some of the banks come up and say, well, it's in a sense also green. Let's call it transition bonds. I don't understand that. You have a principle, the market increased tremendously, but some, you know, they blur it. And it's like, we call it bandwagon effects. So they jump on the bandwagon because they see, okay, these green bonds, they make a lot of sense. We do so as if we are green, but well, hey, come on, we are not fulfilling the principles. Let's call it transformative bonds. And they are even pushing and lobbying to say, well, blur a little bit this green bond principles and just make our, so I think, and I understand every investor who says, I don't understand it, because if you're not deep enough in all that nitty-gritty technical details, you might say, well, what's the difference now between a transformative or transformation bond and a green bond? It all sounds sustainable. But I think the real difference is immense.
Mm-hmm. I would like to mention to our viewers as well that, that you have the possibility to ask questions through the chat box function that you have on your screen on the bottom. So please feel free to write some questions to my two guests, and we will also discuss them. I would like to pick up one expression that was mentioned several times, greenwashing, how you tackle this in your investment work. Sascha Berlusconi.
So concretely in our world, we have a couple of steps that we do. So if anybody issues a green bond, for instance, we look at it and we say, okay, everybody can label it a green bond, but first of all, does it fulfill those 4 green bond principles that have been established in 2014 and are updated on an annual basis? Second step, the second natural step is you look at the assessment, you look who has done the certification verification and what's the report looking like. It depends who has written this report. So they are second-party opinions or verifiers who are completely trustworthy because they come, let's say, from a scientific background. They are completely independent and they are rather a non-profit organization. But if somebody else might do it, you might look a little bit more closer at certain things. Then the next element is some green bonds make it into the green bond indices that are out there, and some are excluded. So if somebody is excluded, you might look a little bit deeper. So for instance, Mexico City Airport issued like amazing, like 3 bonds took 6 or 7 billion of assets. And the purpose was to finance or to build an airport which is CO2 neutral. So when I looked at it, I said, well, it's a bit strange because an airport, how can it be CO2 neutral? But it's only the buildings. And, you know, if the buildings are green, I think it's a step in the right direction. Mm-hmm. And was one of the best verifiers who said, okay, it's really green. And on top of that, you had the Climate Bond Initiative in London, who also review it with around 25 scientific researchers, and if they say, well, it also fulfills our criteria, it's very strong. But then what happened is in Mexico, there was a change in government, they had an election, and they used the money for other purposes. So they used to build a new, how do you say, landing piece there, mm-hmm. And it was even used for military services. So it dropped out of the indices. But this can happen in credit rating as well. So if somebody is diverting the money for other purposes, it doesn't, it gets downgraded. So it was also downgraded by the green bond verifiers.
Mm-hmm. Mm-hmm.
That's how we look at it.
Mm-hmm. Mm-hmm. How do you get along with this topic of greenwashing, Professor Bresch?
I'm probably not so much exposed to it, right?
Yeah, but maybe you are a scientific group.
But yeah, I think it's again to this point. Greenwashing is only an effect that happens because there's a kind of an abuse of trust, that you would first, in a window dressing sense, say we do that and then do something differently. So if everything is perfectly verified and there's perfect transparency, it couldn't happen. But this is impossible, because then I would, even for investing a small amount of money, would spend all my basically my time to dig even deeper and scrutinize. So you need to trust the intermediaries that they do their job well. And so it's very much a function of trust and how you establish that one. And so in that sense, greenwashing will always happen, because as we said, we have a lot of people piggybacking on others' ideas and kind of just jumping on a bandwagon without really playing to the music. Or this is the challenge is to separate that from those who take it, who mean it honestly, and there's no way around that. I think it's also sometimes a risk, and I speak here from my Swiss experience. If you move a large corporate in a direction, it takes time. It's really like a tanker, and you have to start somewhere. And in order to start somewhere, you say something about it, and you cannot do everything at the same time. And then some expect from you, the first time you say we're becoming carbon neutral, you are it already, and you aren't. And then it's a very delicate thing how you count, how you communicate that you're on a journey with your customers, with your employees and your investors, and how you take that forward. And in that journey, it's not trivial to avoid greenwashing, because you have to be a bit ambitious to push a bit, but you're not yet there. And that could always be seen as a loophole. And again, it goes to the level of trust. You have established enough of a trust with all your shareholders that they say, and stakeholders, they say, hey, we do believe you make it. And it does take time, but you're on the right track. And if you can establish that level of mutual understanding, then I think it's less of an issue.
Mm. You want to add something, Sascha Bernasconi?
Well, one of the best illustrations that we've seen comes from the Nordic as well. It's Ørsted. It's been, at the time it was called Danske Oil. So Danske Oil, of course, they produced oil and gas, which they found in the 60s or picked out in the 70s and 80s. And they transformed their business like in 2000, I think it was 2007. They set a very ambitious plan to do it fast, to do it a transformation into the next 15 years. So they had already like 15% coming from renewable energy. But then they said, well, rather than 85 coming from fossil fuels, we want the renewable to be 85 and the other ones to be 15. And so they announced that plan, and actually they stick to it. They work very fast, and they were producing wind farms not only in their regions or not only in Denmark, but they also were producing wind farms and other renewable energy for the UK, for Germany, for the Netherlands, and then they spread out to Asia. So in Taiwan, they are the biggest producer, or one of the biggest wind farm producers locally there. So they went to Australia. They did in Washington like a plant which is using organic material to produce gas and electricity and heat, and they run it for the next 30 years. And in Washington, DC is just buying the electricity. So they have a long-term contract. So this illustration also shows that you can transform from a digging oil company into a technology company, and you can do it. They did it until, I think, 2018. They fulfilled the target. It still means, and they say it publicly, they will burn coal and gas on fossil fuels until 2022. But that doesn't mean they are greenwashing. They are just on a transformation path.
Mm-hmm. Yeah.
That's one of the illustrations that David Bresch mentioned.
Mm-hmm. I would like to mention once again that the viewers, you have the possibility to ask questions by the chat function on the bottom of the tool here. And I would like to go ahead and come to Switzerland. We have mentioned that you have been a portfolio manager of the first green bond fund in Switzerland. And you also told me once that it has been quite difficult or a challenge to launch this fund. Can you elaborate a little bit on this and why it was so difficult?
So Switzerland has not yet issued a green bond. There are some cantons. So it's been maybe one of the things it's difficult because if you come with sustainability and you say, well, it's green bond, but look, this is different as we established before, because when you look at an energy company who might look bad from an ESG perspective, and then you come and say something that does not yet exist in Switzerland. So we have no green bonds. Or no green bond issued from Switzerland. Mm-hmm. And you come and you speak to your potential investors and you say, but this is good and it's different and it's not ESG, so don't worry about returns. And I think those are elements. And if you are, for instance, sitting on an institutional investor board, why should you take that so-called risk where somebody comes to you and say something is new, but it will be the future? And I think the moment it will be established, like a lot of cantons issue green bonds nowadays, Zurich is coming, some banks are coming. It's just a proof that, okay, if it's done by so many companies, by banks and so on, and even by us, by Swiss companies, I think we should consider and understand, dig a little bit more and see what is the risk return. But this has not yet fully happened, I would say, but it has taken quite some momentum. Now, there are other funds which are distributed in Switzerland, but they are not investing directly in Switzerland. They are investing in foreign companies. But one of the first issues of green bonds in Swiss franc was, for instance, Hyundai. So Hyundai came to the Swiss capital market and it was well digested. I mean, people still invest in it and they don't even look at it, well, is it a green bond or not? They just say, well, it's Hyundai. And whatever they do, it works well for me as a bond investor, so I just buy this bond.
Yeah. But nowadays the investors, are these institutional investors? Or, I mean, if I listen to the banks, they tell me that their private clients also appreciate this green thinking, and where does the investors come from that buy green bonds nowadays?
So we have now an elephant in the room. It's called the EIB, and they have a Green Deal. So they have all the incentive to be on the forefront. Sorry, not the EIB, the ECB. So nowadays the central banks are buying green bonds. Whether it's right or wrong, there are debates going on. But I think when they buy it, it becomes very difficult because there is not enough issuance. In the early days of the green bonds, green bonds had a nominal of 100 or 200,000. So it was not designed for, let's call it, retail investors, because you had to buy it like 200,000 or more. But nowadays, a lot of green bonds also have denominations of you can buy it in 1,000 or 5,000. So I would say it makes also a lot of sense for retail investors to buy it, but still a lot of the green bonds are digested by special vehicles, which are naturally green bond funds.
Mm-hmm. Mm-hmm. Yeah. You mentioned the Green Deal of the European Union or in Europe. Do you see, or coming to the title of our webinar, will the issuance grow exponentially now due to also political movements, to regulation, to increased regulation. What are your outlook? What is your outlook for this?
So if I may answer this as well. I think when you look across the ocean to the US, for instance, there was people are asking sometimes, well, will it now change? And change means the US issues around 1/3 of all the green bonds. So we have Pepsi, we have Coca-Cola, we have a lot of municipalities, a lot of states issuing green bonds. I don't think that will change. And maybe even the election of the current president, or still the president in charge, has been a catalyst, because when he was elected and he publicly announced that no, this Paris Agreement, he will step out the first moment he can, and actually he stepped out now 4th of November 2020, which was the first moment he could really technically step out, but I think they will step in soon. So that moment he's announced to step out, there was the "we are still in" hashtag "we are still in" movement, and a lot of municipalities said, now we have to speed up, and we even have to do more on on future investments, which is investing in assets that fulfill the purpose of green bonds, for the sake of giving up maybe some today's and tomorrow's return, but doing something which prepares us for the future. Now, on the political side, I don't think the green bond is rapidly growing, and it has established from 2014 from a $30 billion market to almost 300 billion yearly issuance market. I don't think there are many markets that grow as fast as that, but maybe COVID or the current pandemic helps to think about more future investments than tomorrow's investment. So maybe, yes, it will help a little bit.
Professor Bresch, you have been working in different delegations and groups, and I would like to know from your point of view, Switzerland as a financial center is internationally very important and is also trying to promote sustainable investing as a whole for the industry. Do you think Switzerland has a chance to become one of the leading financial centers for sustainable investing?
I would be even as blunt to say, if there is a future for the Swiss financial marketplace, it must be sustainable. There's just no way around that. And this is one of these secular trends, right? It sounds always a bit preposterous and so on, but and probably I've been a bit exposed to more the Anglo-Saxon type of thinking about things. So think big. You have all the elements it takes. So we have first to start, we have a relatively sound environment. We have a relatively good relation to some of the things that we value highly, be it water, be it environment, and so on. And there we have credibility. And I think also direct democracy provides a certain element of, especially on the governance side, of stability we can really play to or on. And the next thing is that there are these calculations, always a bit of the back of the envelope, but the carbon emissions that flows through the Swiss financial marketplace are 20 times as big as the country's own emissions. So would the Swiss financial marketplace be a country who would be the 6th largest emitter on the planet? So Switzerland should sit at the forefront of the negotiations with the top emitters, not really as a country, because we as a sovereign don't control all these investments, but we have some say in it. Some of the fiduciary duty also comes with that. And we play to that to some extent, but definitely not strong enough. And I think that's a tremendous opportunity. And I see a bit of risk that Singapore and London move ahead fast. It's also a non-trivial feat that the WEF moves for this year. I hope it's only for a year. And these things we have to very, very carefully watch. That we do provide, and we build on the stability we do have and the assets, and especially also this credible story of that financial marketplace, and to build it into that realm. I think many things moved. Swiss Sustainable Finance is the key player, but also the Banking Association. These things have changed a lot in the last couple of years. and we're definitely close. What I feel a bit as a risk is that Swiss Finnish is fine, but probably we should really embark on TCFD, Task Force Climate-Related Financial Disclosures. I mean, 2 big Swiss players are part of the task force, and we have to play that very, very strongly at the forefront. So if we would make that more mandatory than just give it a try, which is currently a bit the approach, we can only gain. So would I be here in charge, I would push heavily, strongly, with a heavy, very clear dedication to go for climate-related financial disclosure.
Now you have mentioned Singapore and London as financial centers that are competing, Switzerland. Now another country that is maybe not known for its financial industry so far, but this could change very much. And this is a question that is now coming in. Many funds either include just a small portion of Chinese green bonds or exclude them completely. What will be China's role in the issuance of green bonds in the future? I think this is really a good question.
That must go to the green bond expert first.
I take it. So I like it. Well, if things are decided in China, they get implemented very fast. That's one of the differences. And I think we have a lot of Chinese issuance of green bonds. It's huge, although they work a little bit on a different technical understanding of what is a green bond. But hey, come on. China is one of the countries they are still in the Paris Agreement, and they are even not fighting it on the Twitter accounts like others do. But I think they are part of a dialogue. And what is more important about China than others is they are one of the big issuers or emitters of CO2. So if they are part of a deal which goes to a reduction of CO2, it changes the needle. Whereas if Fiji, who also issued the green bond, but if Fiji, goes completely CO2 neutral, it doesn't change the needle that much for the world. So China is still in, and they have a lot of green bond issuance. And if you don't buy, if you exclude Chinese green bonds, I think you will just miss a lot of the market.
There is another question now that is coming in. What actually we touched this subject already, but we could pick it up again. What are your opinions on transition bonds aimed at financing the estimated $35 trillion cost to decarbonize the world?
Mm-hmm. I start by rephrasing what Mr. Bernasconi already said. So we do need transition to a low carbon economy. And that's an absolutely reasonable price tag in the question. And the question is, where does the money come from? And to what extent does it need to be labeled? That's a separate issue. And why not take an instrument that has been established and has a certain set of principles to do as much as it can, and then think, what else do we need? And it's not an either or. We need all these instruments. And the only thing I would have as a caveat, if we would go for transition bond as a new label, very, very carefully think whether we really need it. Because only if it does really something which is clearly set apart from green bonds, which they cannot deliver or something like that. Otherwise, I don't think we serve a lot of the deeper required needs by just inventing new labels. The money has to go into these sectors that do provide services as low carbon with a low carbon footprint, or to transform those who still have a high to get to a low carbon footprint. And that's the game. And that goes back to my previous point to say it's all about transparency. If you go for a standard bond and you can in your issuance clearly say what you do with it and where you contribute, then you don't have necessarily to label it either one or the other way. It just has to play to that goal.
Mm-hmm. Can I add something to that? I like this question. So the 35 billion, I slightly recognize this figure because the International Energy Agency estimated a couple of years ago that the transition will need 40 trillion. I don't know where the 35, maybe it's a new one, but okay. The International Energy Agency, the Climate Bond Investment Initiative in London, the NGO, where Switzerland, the Confederation of Switzerland is a founding member, estimates that we would need, like, from 2020 onwards, we would need 1 trillion, so 1,000 billion every year issuance. We are now at 350 billion. So we are not yet there, but like a couple of years ago, when we were at 30 or 40 billion issuance per year, we would say, well, forget about it. It's never possible. This 1 trillion, forget it. But now we are 350. And the way it increases, it stipulates that we will very soon reach the 1 trillion. So I'm pretty relaxed from that perspective, because with all the green bonds that are out there, we are on a very good road, that there is enough money to transform the world, that we can achieve this. So I'm relaxed. Now, I give you an illustration. Before 2014, before the green bond principles, you had a Spanish raffinery, which was putting a filter on the raffinery, and it was taking a lot of CO2 away. And you could tick the box and say, well, the green bond principles. Is there a second opinion? Well, there could be one, so they could have they could get, in a nutshell, they could have all the green bond principles. Mm-hmm. But nowadays, or with the establishment of the green bond principles, and later on, this bond was looked at, well, what a scandal. You put a filter on a raffinery. I think it's about transparency, as David Bresch said earlier. You need to know where you invest your money. And with the green bond principles, you have that transparency because you have a second party opinion which looks at it and says, we believe this is really green because it does X, Y, Z. But nobody will say, if you put on a raffinery a filter, it will do a transformation, because the effect is you still produce a lot you burn a lot of crude oil to make it raffined oil. So it's not a transformation, so it doesn't fit. Now, would you need, in today's world, where we have enough green bonds to achieve the Paris 2015 goal, would you need transformation or transition bonds? I don't think so. So you don't need it from a volume point of view, and you don't need it because it's just confusing people, and you don't need it, thirdly, because you don't have this transparency. So why do you need it? I think the only one who really needs it is the raffinery, who cannot do a green bond, but still wants to finance something that they could label with whatever label, something different. And I think we have to be very careful and spell it out and say, this is not, we don't need that.
Mm-hmm. Yeah. We're slowly coming to the end of our webinar. One more time, I would like to mention the possibility of asking questions to Professor Bresch or to Mr. Bernasconi. If we look ahead, what do you think is necessary, except the transparency, to further promote green bonds?
I do think, and I take it a bit from a recent study done by the Bundesamt für Umwelt, so the Federal Environment for the Federal Agency for the Environment, where they looked at the environmental literacy of the financial sector. And I think this is still a hurdle in front of us, that players in the financial marketplace do understand enough of the big global challenges, so they can, in their day-to-day business, in their decision-making, really take these things consciously on board. So I think that's an element we have to invest heavily. And we cannot wait for the next generation to graduate to bring that along. We have to basically do the on-the-job training for those who are already taking these decisions daily, in a daily fashion, and they contribute to well, basically just the financial economy, and how we make sure that this thinking perfuses quickly into all these ranks, So we start to play more to the same tone, because still, and I say that more as a say the client relationship to a bank often, and it's unfair if I come as an ETH professor and ask about sustainability, obviously, but sometimes it's a bit sobering. That's really almost everything is lacking. And that's sad, because most likely when I then talk to people, they have quite a keen and a shared and a personal interest in these matters. So I think we can unlock that by providing this education, probably not so much on an ETH level. We don't need that. We just need, we need more. It's starting from the vocational training, that these elements are part of the curriculum and part of the retraining that does go on. I mean, most of us have a couple days per year. We do further develop, and if in that part this is taken on board, I think we have a tremendous opportunity to build on.
Mm-hmm.
If I may say something, do we need? I'm often asked, do we need additional regulations? So finally, the Swiss comes right. Do we need something from the FINMA? Now they need to prescribe something. And my stance is, well, the green bond market has established from itself. So there was nobody saying, well, you, the issuing companies, the lead banks, you, the investors, you now need to do X, Y, Z because there's this and that regulation. So the ICMA, the International Capital Market Organization, which is ruling basically the bond market, they came up and said, well, we see everywhere those green bonds. Now let's bring everybody on the table. We organize ourselves and we do the green bond principles. Of course, we update every year and everybody can take part. And so do we need regulation? I don't think so. So we need maybe education. And I think if we need something else, another element is it's a big word in Africa, it's inclusive. To inclusive growth. So I think we would also need inclusive investments. So you cannot talk like somebody from an ivory tower, we in the banks or somebody else, and say, well, we talk about sustainability because we can afford it. I think if you can, and there are green bonds being issued and financing things in Africa where you have very small, so Total is doing that, where you have very small projects like $10,000 project, but for somebody putting a solar panel on his very small house, and rather Total going to the last point and selling them oil, which is bumpy road sometime, they tell them, look, you still can have your gasoline, but you don't need it for the next 5 years because you've got solar panels. And I think that is really an illustration for inclusive, sustainable investments.
So financial literacy and inclusion, these are two nice topics that I would pick up and keep. And I would like to thank you for this very interesting discussion about a financial topic that has also a huge impact on our life and on our world. I thank you very much, and I wish you all the best on your further career steps. Thank you very much, Professor Bresch. Thank you very much, Mr. Bernasconi.
Thank you.
Thank you.
Thank you.
Yeah.